to really operate AI within your company, meaning that shifting heavily your processes, your technology, shifting your HR, your talents, that's something completely different. What I can say right now is that the PE industry is really taking AI very, very seriously. And I can give you a few figures. More than 60% of the PE firms saw some revenue increase at their portfolio companies due to AI. That's a lot. And we are only now, only after 2 years. One fund said over 25% of their revenue growth was attributable to AI. Mm-hmm. So that's really happening now. So it's not only about visioning and giving strategy around AI, it's really about giving it real within the company, so operationalizing it.
Welcome to ThinScale, the show that takes you to the heart of finance transformation. Every week, Solène Niederkorn and her guests explore new initiatives shaping the future of the industry.
Hello everyone, I'm very happy today, delighted to have my dear friend Bleuzenn Pech de Pluvinel, Managing Director at Accenture and part of the leadership team of Global Private Equity. Hello Bleuzenn.
Hi Solène, thank you for hosting me.
Yes.
Very happy to be here with you.
Thank you for joining the show. Great to have you here. Bleuzenn, I started discussing with you like 2 years ago, and I was really impressed by all your professional journey. You've navigated the entire advisory realm for many years, and you have a very strong knowledge in private equity. And all the stories you tell about your business, about your clients is very, very interesting. And that's the reason why I decided to invite you today for an episode. Could you take a few minutes and introduce yourself to the audience and tell a bit more about your professional journey?
Yeah, thank you, Solène. So I started my career in politics, in fact.
No.
Serving the French government.
Really?
Yes.
Funny.
Very funny. And then I moved to business. And so I've been working in the advisory business for the last 20 years, serving mostly large American, US-based firms like Deloitte, BCG, and now Accenture. I started to serve private equity from a strategic and operational side almost 15 years ago. Mm-hmm. And that's what gives me, a unique outlook on this industry, which has evolved a lot over the last 15 years.
So Accenture is a well-known advisory firm and with a very strong tech approach. I didn't really work with Accenture, but that's the image I have. So why did you decide to move from a very traditional advisory practice at BCG and Deloitte to Accenture?
Yeah, that's a very good question. I thought it was the right place really to be... To engage with my client on very important topics such as digital, AI, and tech topics. And it's very interesting because 15 years ago, the technology topics were a bit separated from the strategic and operational topics. And that's no longer the case. What our client wants now, they want like solutions, they want end-to-end approach, and they want more operationalized approach. Mm-hmm. And where, I was really on the very advisory strategic side, 10 years ago.
Yes.
Now I really enjoy being able to provide to my clients some really technical and concrete solutions. So I think also the consulting industry has shifted a lot.
And yes, and right now it's really hot.
It's really hot.
Topic.
It's a hot topic, but not only. I do think also our clients, they have evolved. They are more mature. They know what they want. We'll come back to that when it comes to the private equity industry as well. They are extremely mature when it comes to actioning advisors. And clearly for me, Accenture is the right place to be in that respect. Because we are really able to provide those end-to-end solutions, mixing advisory, strategy, and technology solutions.
You've operated for many years in this realm. You know by heart the private equity environment, and you work currently daily with all the main PE firms in the world. So can you just take 2-3 minutes to explain to us what's the state of the PE realm right now, and maybe with a focus on the US?
Yeah, so as I was telling them, I'm serving most of the biggest private equity firm in the world. So we are serving the first 30 biggest private equity firms on top of other smallest one, but still I can see this industry shifting heavily. So when I started serving them 15 years ago, they were really focused on the financial return. So it was mostly financial advisors, and basically you could operate a deal only with a lawyer and a financial advisor. The operational side was pushed toward the management of the portfolio companies, and so we were more operating at company level and having less interaction with the PE firms. Now the exit is mostly on the operational side. So you need to work out your value creation. And that's how the private equity firm has heavily evolved towards a model where they are embedding operational capabilities at fund level with a unique network of operating partners, external advisors working full-time for them, specialized, etc., etc.
And how do you explain this shift?
It's because now the LPs are putting a lot of pressure on them on the IR. And now it's not only about deal making, build up, it's really about value creation within the portfolio company.
Okay, that's very clear, and this is also the feeling I have on the market. Can you take the most iconic transactions right now in the realm?
I think the most successful PE firm right now are those who are really bold on the way they are articulating deals. Let me give you the example of the primary carve-out. I mean, 10 years ago, very few firms had the ability to perform a primary carve-out. So, buying an asset from a corporate, creating the company almost from scratch without having any capabilities within the PE firm, obviously. Then doing bolt-on, bolt-in,
I don't know the distinction.
Yeah, rebuilding.
Yes.
Rebuilding a new company from another acquisition coming from the primary carve-out, etc. So very complex puzzle of companies and leading to consolidation of the market. And that's why, obviously it's super interesting to work with those clients because, they are doing things in the market that no one is doing. Corporates are doing it sometimes, but it's slower, it's more complex, more difficult. So the PE firm, they have the money, they have the ability to perform those super complex deals, and that's for me is rather iconic. But to perform that, you need to have really strong capabilities and strong knowledge also on the operational side.
But all those ideas and all those transactions that you mentioned, is it an idea that comes from the GP or is it coming from the advisory firm in general?
No, it's clearly coming from the GPs.
Okay.
And the profile of our client has strongly evolved. 10 years ago, I was mostly talking to the investment team.
Okay.
So I was interacting, I would say, half the time with investment team, half the time with the management of the company. So the investment team was pushing the operational topics to the management, to the company directly. So now we are facing much more specialized teams within the PE firms, and that's driving the way they are operating the portfolio companies completely differently.
You explain this because you have more competition between the different firms?
Again, it's because of the pressure to get the most out of the value of the portfolio companies. So because you need to be deeper in the value creation plan, you need to have people at fund level able to manage that.
Yes, but it's way more expensive for the PE firms.
Those operating partners, they are managing several portfolio companies most of the time, or they are cross-portfolio. And most of the costs, are in the portfolio companies, obviously.
Okay. And what is the reaction of portfolio companies with regard to this support?
Yeah, it's a very good question. I think the trust in the management is still very important. And when you're looking at a new asset, when you're a GP, you need to look at the management. Are you keeping it? Are you changing it? Anyway, what is the track record? So the trust remains very important. But still, the operating partners and the operating team at large are very present all along the duration of the detention. That's a bit new.
Okay.
I would say 10 years, 15 years ago, they were pretty present at the beginning of, I would say 100 days. And then they were pushing topics toward the management and tracking the performance much more on the financial reporting. Now they are really present all the time. So, very on the ground. I've seen that recently in a deal where, you had almost one operating partner per topics, partnering with the executive committee really on a daily basis. So they are extremely hands-on in the value creation because this is what LPs want.
Okay. The Accenture's positioning I had in mind is advisory, implementation, and run and operate. So what does it really mean if we take an example, a very concrete case?
Well, I mean, when we are talking about this end-to-end approach, basically, the PE firm are calling us when they are starting a deal. We're able to perform a full stack of due diligence on the strategic and operational side, going to ODD, operational due diligence, to IT and tech due diligence, cyber due diligence, AI due diligence now. So that's where we are helping them to assess the deal. And then when they are moving towards closing, we are getting deeper and deeper into the assessment, building the value creation plan. Sometimes the full value creation plan. Sometimes we are working only on pieces, such as the technology piece. And then most of the time, Accenture is really the long-lasting firm when it comes to the value creation. We are really supporting them all along the duration period of time, especially when it comes to large technology transformations. It takes many years. So we are really there on a long-term basis.
Okay, so we hear and we read a lot of things about advisory and the growing challenges of advisory firm towards artificial intelligence, for instance. So I wanted to know how at Accenture, but also with your clients, you face all those growing challenges, be it AI adoption, digital infrastructure, or cybersecurity.
Yeah, I mean, I believe that the most successful PE firm, they are really the ones who are going to treat value creation as a continuous data-driven process, not only like a one-off project. You have a value creation plan and you're executing it. What we are seeing is that they are reassessing, constantly this value creation plan, very data-driven. When it comes to AI, 25% of the portfolio companies are now embedding AI within their value creation plan. It's clearly not enough, we can say, but it's still, pretty high in comparison to the rest of the industry. So I would say the private equity firms are very much keen to embed AI in their value creation plan. This is also a request coming from the LPs and from the investment committee.
How do you make it really operational, this strategic plan?
Yeah, there is a big difference between having an AI vision or an AI strategic plan, which in many cases is extremely useful. For example, when you have a business, then it's to be shifting completely because your clients are expecting something different, or your client thinks AI will disrupt your business, so you need to have a new approach. To really operate AI within your company, meaning that shifting heavily your processes, your technology, shifting your HR, your talents, that's something completely different. What I can say right now is that in the PE industry is really taking AI very, very seriously, and I can give you a few figures. More than 60% of the PE firm saw some revenue increase at their portfolio companies due to AI. So that's a lot, and we are only now, only after 2 years. One fund said over 25% of their revenue growth was attributable to AI. Mm-hmm. So that's really happening now. So it's not only about visioning and giving strategy around AI. It's really about giving it real within the company. So operationalizing it. Yeah.
So taking the example of internally how at Accenture you managed to face this challenge, how do you also, so at Accenture, but also with your clients, make it happen?
Again, for my clients, I can give you a few examples. We are extremely concrete and basically we're using use cases.
Yes.
So it's not like a big shift within the company. It's more like, let's try on one process, one topics. Let's take supply chain, for example.
Mm-hmm.
We're going to put AI on supply chain. Let's take marketing and sales processes, after sales services. So we are really keep taking it step by step, topics by topics, trying with use cases. And what is use cases? It's really like continuous improvement. And we have also these unique capabilities to embed both strategic advisors, industry experts like me for private equity, and then very technology profiles like solution architects, data and analytics architects, etc., etc. I would say that it's unique combination of business-driven consultants and and technologists that make it happen.
But also a build-up strategy that you might have to incorporate and acquire companies that are really good at improving this and that process internally. Correct or not?
You mean within Accenture?
Yes.
Yeah. I mean, the reason why we are currently leading the pack when it comes to AI is because we have been this long-lasting strategy to acquire the best in the market. So that's the case. So I mean, today we have unique capabilities within Accenture, and we have also a unique ecosystem partner. We are partnering heavily with, I mean, also the leading player in the market. So we are really able to deploy unique capabilities within the market, not only visioning.
You've seen advisory in Europe, driven by Europe, and advisory firm driven by the US. Do you see a major difference in the approach towards the clients themselves?
I don't think there are many differences. Why? Because we are serving large global clients, whether it's private equity firms or corporates, and they are now operating globally. Even if, when it comes to AI adoption, you need to take into account local culture. But I don't see that much difference, to be honest, in the way they are deploying the topics. No.
Okay. I told you that I would be interested to go from the strategy to concrete examples showing very precisely how you can support your GPs and portfolio companies. Could you take one case and we do a deep dive from the pre-deal assessment, post-deal execution, and the results achieved?
So when the PE firms starting to contemplate this acquisition, they ask us to perform a digital and operational due diligence. So we use data to benchmark the target performance and to validate the PE firm assumption. Then we identify around 20% potential EBITDA uplift through two topics, supply chain efficiencies and digital sales enablement. Those are the two main drivers.
So this is during the pre-deal assessment?
Yeah, pre-deal assessment. So that was
before the investment committee?
That's a good question. Let me think about that. I think the investment committee occurred while we were performing those DD, and I remember that we were giving some data to our investment team so that they are stronger in front of the investment committee.
No, I ask you this because you said that there was a lot of pressure from LPs, and that's you already had pre-deal pre-deal assessments.
That's new. That's very interesting because most of the time we were called by our clients long after the EIC. And now sometimes we are called before the EIC. That's very interesting because the EIC now is much more picky than they used to be. Challenging the acquisitions because money is now more expensive and for also other reasons. And so that's interesting in the timeline that we are performing some really deep dives before the IC.
Yeah, I told you before that I've been working with an advisory firm on a due diligence for a target company for the investment of a fund in a target company. And I was so impressed by the work that had been done by the advisory firm. I was just advising on one specific topic, but I saw the deck and the huge amount of data that had been populated to get that choice from the deal. It was really impressive. So you have the deal is done, signed, and then what happens?
Yeah, so after the deal, we launch a 100-day transformation office to execute quickly. And that's where, also the PE firm teams and the operating partners are extremely important. And that's where they are extremely present as well. So in this particular case, what we did, so we consolidated the procurement across business units. We moved the ERP to the cloud, and we built predictive analytics to reduce the maintenance cost. So that's the examples how we came from the DD phase where we have identified those value creation potentials around supply chain efficiency and digital sales, and it has translated into concrete action like moving the ERP to the cloud, building predictive analytics to reduce the maintenance cost, etc., etc.
But then you change the entire the governance of the company. How is it, or the advisory team comes and sits with the executive team of the company? How?
Yeah.
Okay.
Yeah. So it's really like on a project basis.
Okay.
So in this particular case, the management stay in place, but they really needed a lot of support to maintain a high pace on implementing those transformation.
It's very tough and maybe sometimes difficult for the managing team to be, a sort of well-known mode, operational mode, and then you arrive and then you have a 100-day plan. And do you see some tensions, or what is the reaction of those teams when you arrive?
I think when you have a management who is not used to be PE backed, that's a cultural change.
Mm-mm.
But I'm very positive on that, because those PE firms, they are also the ones who are doing the most challenging, interesting, and boldest projects in the market. They are able to consolidate some industries. So I do think for the management, it could be really refreshing, interesting, and challenging. And obviously, they are also highly incentivized. So that could be also a career shift for you. So I would say it's not for everyone. But honestly, most of the management I've worked with, they are exciting by being PE backed. It's giving them perspectives, accelerating the timeline. Some, they can do transformation that they were willing to do for the last years without probably a support on the necessary investment. So I more see that as an opportunity for them.
Okay, so if we summarize, the value creation after the deal is rather on cost optimization, digitalization, new revenue streams.
Yeah.
Other elements you would like to mention?
Well, we also helped the management team to launch a new digital services that generated recurring revenue. Something also the original investment thesis hadn't even included. So, sometimes we are even going deeper than what the value creation plan was embedded. And so within 18 months, this company delivered double-digit EBITDA improvement, higher customer retention, and faster working capital turnover. Okay. So it was really very, very successful. And again, it was a strong partnership between the advisors and the management team and the operating team from the PE firm. And I would say the deal only worked because the operational playbook was ready before the ink was dry. So this is also completely new, that I would say 3 to 6 months before the closing, almost everything is ready in terms of planning. And as I was telling you, sometime 10 years ago, 5 years ago even, you have some PE firm calling us at closing. It's no longer the case.
So maybe I'm a bit naive asking the question, and sorry for that, but do you have a lot of private equity firms? So not necessarily the tier 1 that you mentioned, but also tier 2 or tier 3, not necessarily using advisors when they do an acquisition and using their own resources.
Based on what I was explaining around, the importance of a strong value creation plan and its execution, is clearly not the case anymore. So I would say maybe in some small, mid-sized deal, and even for those ones, all the PE firms are using advisors in all type, not only operational advisors, but also lawyers, bankers, etc. So being really equipped to perform the value creation plan requires a lot of advisors. The operating team has been reinforced, as I was saying, but it still remains pretty lean, and they are managing several portfolio companies. So when it comes to the daily execution within the portfolio companies, they are heavily relying on advisors.
So Bleuzenn, that's very clear. Thank you very much for going into such details in this business case. One question about the operating partners, because it's a very new, I would say, category of stakeholders in all those transactions. So could you describe who those persons are, where are they coming from? Do they have a typical profile?
Yeah, no, that's a very, very interesting question. Most of the time we have two profiles. One profile is very senior persons. So they have been former CEOs, former CFOs from large companies. Sometimes they are even coming from the portfolio companies, but not all the time. So they are very seasoned professionals, and they are bringing their experience, their outlook on the market. There are also a role to coach the management, so they can be, advising, supporting them on the execution of the value creation plans. So those are the type of operating partners that I would say is more traditional within the PE firms. They always have a strong network of senior advisors, seasoned professionals. The new categories we are seeing are more like professional operating partners.
Yes.
Meaning that they are starting at a very young age. I mean, after a few years, whether in corporates or in the consulting business. So we have now a lot of operating partners coming from consulting firms. And they have more like 5 to 10 years experience in consulting business. So this is a new categories of operating partners. And those are also the ones spending a lot of time within the portfolio companies. And the third trend is around the specialization of those operating partners. So when you have those senior advisors, they have a unique vision on the market, but they are, I would say, a multidisciplinary approach. You are former CEOs, you can be relevant on finance, on marketing, on sales, on industry, on processes, etc. Right now, we are really like having specialized operating partners. We are specialized in data and AI, in finance, in supply chain and procurement, in technology, etc., etc. So they have now assembled unique teams, very much reinforced as it was before, and that also is challenging the consulting industry to make sure that we are mirroring this organization and able to put experts in front of all those operating partners.
There is one trend that we didn't mention, and maybe it's important that you give us your opinion on this. It's the integration of ESG. Is it something that remains important for the GPs or still on the side right now?
I think it remains important for the LPs as well.
Yeah.
So you have also a new generation of LPs that are more sensitive to ESG. I think the ESG is still something with keeping the GP up at night right now, clearly. It's no longer a compliance box. It's all about value protection and creation. What has changed, I would say, is because of the pressure on costs. ESG topics have shifted towards more decarbonization of the portfolio, making your supply chain more resilient, and embedding social and environmental responsibility criteria within your value creation plan. Okay. But don't forget that we are talking about an asset management industry, and ultimately what matters is the IR. So you have to balance.
Yes.
Well, I mean,
yes, it's true.
You have to embed. You have to balance those two criteria and make sure that they are both compatible.
So you mentioned something earlier, and I would like that you take a few minutes again to go back to this, is the role private equity has to play in the transformation of our economies. You just mentioned that a few minutes ago, and I find it interesting that you elaborate a bit on this.
Yeah. And this is one of the reasons why I like to serve, this private equity industry, is because they are consolidating the market and identifying high potential business and doing things in the market that no industry is doing in terms of recomposing, investing, giving perspective, shifting the model, shifting the ecosystem. So they are really transforming and shifting, especially the mid-sized market. I'm working mostly for large private equity firms, but it's interesting to see how this industry at large, also the top 2 and top 3 tier private equity firms, are really crafting the mid-sized market.
Thank you very much. Very inspiring. Thank you, Bleuzenn. So maybe you don't know, but now you know. My last word is always a book recommendation or a podcast. What would you like to recommend to us today?
I don't know if I'm going to be very original, but sometimes I really like to hear to listen to is the Goldman Sachs podcast. I think they are among the best when it comes to identifying the trends in the market. So that's where I'm taking most of my inspiration.
Really?
Yeah.
I didn't know about the podcast. Yeah. I'm going to listen. Thank you very much, Bleuzenn. Very inspiring. Very straightforward.
Thank you, Solène, for hosting me.
Bye.
It was really nice to interact with you. Bye.
Thank you for listening to FinScale. Don't hesitate to subscribe to the newsletter on Substack to stay up to date with the latest innovations. You can also find the podcast in audio format on all listening platforms and in video format on YouTube. See you soon with Solène Niederkorn.